Assalamualaikum. Good day everyone. My name is Nur Adiani Muhammad, metric number A24A0077EP. Today, I will briefly explain question 1 and question 2 from case study 7, which focus on the concept of the inflation rate and how is it calculated. Inflation refers to a sustained increase in the general price level of goods and services in an economy. The inflation rate is the percentage change in the price level from one period to the next. When inflation happens, the purchasing power of money falls, meaning consumers are able to buy fewer goods and the same amount of income. Economists usually measure inflation using the Consumer Price Index or CPI, which track the price change of a basket of commonly purchased goods and the services. To calculate the inflation rate, we use the CPI-based formula in this slide. This formula tells us how much prices increase compared to the previous year. For example, if the CPI in 2023 was 120 and the CPI in 2024 increased to 132, so the inflation rate for 2024 is 10%. This result means that the general price level increased by 10%. A 10% inflation rate indicates a higher cost of living and it reduces the value of money over time. This is why inflation is an important macroeconomic indicator that affects household, businesses, and the government too.
Hi, Assalamualaikum warahmatullahi wabarakatuh, and good day to everyone, especially our beloved lecturer. So, I'm Faizal Ismail bin Adam. My ministry number is A24A0083AP. So, today I will explain about the key factor that cause the inflation in the domestic market. So, based on the article, the Consumer Price Index or CPI increases to 3.2% in the December 2021. This is significantly higher than the long-term average of 1.9%, which clearly show that overall price level has risen. So the main reason for this increase is the rise in the production and operational costs. When the economy reopened toward the end of 2021, producer faced a difficulties to obtain the enough raw material. This supply shortage caused price to go up. And then next, we can see the several major CPI component that recorded sharp increases. For example, the transport sector increased by 9.5%, mainly because of higher fuel price. Housing and utilities increased by 3.4%, while food and beverage rose by 3.2%. This number show that the inflation affects many essential goods and services. Another important factor is the global value change. Uh, Another important factor is the global value chain. When one producer experiences a higher production cost, the cost get passed on the next stage of the supply chain. Eventually, this increased cost reach consumer in the form of the higher retail price. This process is called price transmissions. In summary, domestic inflation was driven by the supply disruptions, high input and fuel costs, and the global market pressure. So now I will explain the type of inflation experienced by China and the United States. Based on the information provided, both countries are experiencing the cost push inflations. This type of inflation happen when overall price increase because of the cost of production is rising, but not because the demand is too high. After the pandemic, China and the US face a serious energy crisis. Since both countries depend heavily on imported energy, the sharp increase in the fuel production cost to rise dramatically. And then energy is needed for almost all the sector, like transportations, manufacturing, and logistics. So when the energy prices go up, the cost of producing goods also increase because the producer have to bear the high cost. They pass them on the consumer by increasing the selling price of the good and service. This match the definition of a cost push inflation. Therefore, the inflation occurring in the China and the US is classified as a cost push inflations because it is driven mainly by the higher energy prices and then global supply disruptions.
Hello everyone, my name is Zuraida binti Muhammad Husni and my number is A25A0166EP. And now I will explain how the government can use the fiscal and monetary policy to control price increase. First, under fiscal policy, the government can introduce measures such as tax incentive, subsidy, and support for essential goods. This action help reduce the cost of production for business. When the business face the lower cost, they can produce more goods. This uh, this increase in supply helps stabilize and even reduce the overall price level in the market. Next, monetary policy also play an important role. Through monetary policy, the government and central bank can provide easier access to financings. These include business loan, credit guarantee, and various financing schemes. This support increased cash flow for businesses and help them expand their production capacity. When companies are able to produce more goods, the supply is sufficient and the production process becomes smooth. This production, this production cost and ultimately the price of good can be stabilized or lowered. In short, boost for fiscal and monetary policy work together to reduce the cost of production, increase supplies, and stabilize price in the economy.
Assalamualaikum. My name is Anis Nadia binti Muhammad Hanifah, metric number A24A0088EP. Today I will explain about who benefits from inflation. Okay, firstly is the investor. Inflation occurs when the prices of goods and services increase. These prices increases usually happen because companies are facing higher production costs. To maintain their profit, companies raise the prices of their products. When companies successfully pass these higher costs on to consumers, their revenue also increases. Over time, this can lead to higher company valuations. As a result, investors who own shares in these companies may benefit because the value of their stock rises. This is especially true for industry that sells essential goods such as food and household items. During inflation, people continue to buy these necessities, which helps support company growth. Secondly, is mortgage holders with a low fixed rate. A fixed rate mortgage means the monthly payments remains the same throughout the loan period. As inflation rises and the value of money declines, these homeowners continue paying the same amount. This means they are essentially paying off their loan using cheaper future dollars compared to renters who often face rising rent prices. However, fixed rate homeowners are more protected. At the same time, the value of their house usually increases during inflation, so they benefit in two ways, which are stable monthly payments and an asset that appreciates in value. Lastly is precious metal holders. People who hold precious metal holder, such as gold or silver, also benefit from inflation. Precious metals are known as an inflation hedge. This means they tend to hold their value even when the value of currency decreases. Historically, gold often increases in price when inflation rises. Although there may be short-term fluctuations, precious metals generally help protect buying power better than holding cash in a bank account. This makes them a useful tool for preserving wealth during inflation. Okay, that's all from me. Thank you.
So today I will explain why inflation is considered a serious problem for the country's economy. First, inflation reduces the purchasing power of consumer. When price rise faster than income, consumer especially in the B40 and M40 group, the the consumer cannot buy the same amount of good as before. This lowers their standard of living and creates financial stress for many families. Second, inflation. Inflation increased the government's financial burden. When interest rates rise, the cost of serving the country's debt also increase. This reduced the government's ability to spend on important social programs and development projects, which slow down the country's progress. Third, inflation affects a country's export competitiveness. Higher production costs make uh, export goods more expensive. At the same time, the currency may be weak, making important more expensive. Salaries workers are particularly affected because their income does not increase with rising price. Fourth, inflation causes price instability, which reduces investor confidence. When investors cannot predict future costs or profits, they may postpone or avoid investing in the country. This leads to lower levels of investment and slow term economic growth. Finally, inflation has strong social impacts. Food inflation affects low-income households the most, as the most their income is spent on basic ne- ne- basic necessities. Rising cost of living can increase poverty and widen incomes gap between groups in society. In conclusion, inflation is a major economy issue because it affects consumer, business, governments, investor, and overall well-being of society. That's all for me. Thank you.